Microsoft, Google, Intel just reported. We have a little bit of a mixed bag. In this video, we're going to go over their results as well as their press releases. And then tomorrow on our main channel, we're going to go over a more in-depth dive into the companies about how they are, stock analyzer tool to determine what their value is. So first off, guys, if you like news, if you like earnings results, if you like talking about those things, the economy, everything, make sure you subscribe to this channel. That's what the focus of this channel is. 3 to 5 videos per week where we talk about all of these things. Microsoft, they reported $2.94 earnings per share. The estimate was for $2.84, so they beat it by 10 cents. Revenue came in at $61.9 billion, beating the estimates of $60.9 billion, beating by $1 billion. Currently after hours, it's at $4.18, up 4.75. All-time high was March 21st at around $430 a share. So even with this, they're still below their all-time high. Microsoft, incredible business. Let's take a look at these 8 pillars here. Guys, 8 pillars, check marks all the way around, except for the valuation. Now, tomorrow in tomorrow's video on the main channel, we're going to go over these valuations. Because remember, Microsoft's a great company with a high return on invested capital, moat kind of behavior, of course, Microsoft Office, things like that. So you should pay a premium for it. But remember, there's always a price that's too high for a great thing. All right. So let's go see what analysts are saying about Microsoft. They have nothing but positivity here. 1150 all the way to 1982 in a few years. So there's a lot of positivity about Microsoft, which is a lot different than it was 12, 13, 14 years ago. People said Microsoft was dead, etc. Let's go pull up their earnings press release to see what is going on at Microsoft. Okay. Revenue was $61.9 billion, increase of 17%. Operating income, $27.6 billion, an increase of 23%. Net income, $21.9 billion, increase of 20%. EPS, $2.94, an increase of 20%. Huge increases here. I'm actually surprised that this EPS and the operating income and net income weren't up significantly more than 17%. The reason I say that is, let's go look at their gross margin at Microsoft. The gross margin is pretty high, 70% right here. That means for every dollar they add, 70 cents of that, as long as they keep their overhead the same, will go to pay taxes and go for profit. So it means to me they probably add a lot more overhead than I would have expected. All right, let's keep going down here. Microsoft Copilot and Copilot Stack are orchestrating a new era of AI transformation. This quarter, Microsoft Cloud revenue was $35.1 billion. Oh my gosh, guys. $35.1 billion out of the $61.9 billion of revenue. That's up 23% year over year. That's an incredible, incredible level. So a few highlights from their business components. Office commercial products and cloud services revenue, 13% increase. Office 365 commercial revenue growth, 15% increase. The other consumer products and cloud services increased only 4%, and Microsoft 365 consumer subscribers grew to 80.8 million accounts. That is a lot. LinkedIn revenue increased 10%, driven by more posts about people interviewing homeless people and then giving them the job when they realize they're actually really good people and they were the person that mugged them the day before, or whatever LinkedIn stories are out there that are complete BS that I got off LinkedIn for that exact reason. Okay. Revenue in Intelligent Cloud was $26.7 billion. I don't know what that means relative to it. Personal computing, 15.6. Microsoft returned $8.4 billion to shareholders in the form of repurchases and dividends. I really hate repurchases. And I'll go over that tomorrow in the video on our main channel. That is absolutely, absolutely important. Guys, the story I always tell about Microsoft is really, really important. Back in 2011 and 12, I thought to myself, Microsoft looks great. It's selling for 9 times earnings. Its revenue and profit are up 7 or 8% a year consistently. Its revenue's up that much. The profit's up 10 to 12% a year consistently. So I was like, this is great. I'm going to buy this company. Started buying it. And one day I had a lunch. And I always tell this story. It's a very common story I tell because not the very first time, but it was one of the first times that somebody looked at me like I was an idiot about buying an individual company. I heard people say like, oh, the market, you're wrong about the market, etc. But this individual company, I had a lunch with a tech CEO. And I said to him, like, well, yeah, like Microsoft, it's obviously, has its struggles, but it's a great company financially. Oh, I'd never buy Microsoft, he said. I said, Well, not never. He goes, no, never. I go, well, if the company was $50 billion, but they had $100 billion in the bank and no debt, you'd buy it for $50 billion. No, I wouldn't. I'm like, no, you don't get what I'm saying. I'm saying you pay $50 billion, you shut the company down, you still make another $50 billion. He goes, no, I know what you're saying. He's like, I would never do it. I was like, no, that's stupid. He goes, no, it's not. He goes, technology is a very fickle business and Microsoft is dead and I would never touch it. And I was just like, I remember walking away from the meeting going, two things: investors are stupid and tech people are even more stupider. Yes, I said stupider on purpose. The whole point is, I guarantee if I went and found that guy today and talked about Microsoft, he would revere Microsoft, he would love it, and he would deny ever saying that. Because that's what happens when you're in this shit of things. Microsoft at the time was selling for, I started buying it at 17, but that wasn't the low. It hit a low of like 11, but 10 years before, it hit a high of $52 a share. And on the way down, most people see this. They don't see revenue. They don't see profit. They don't look into those details. That's what I want you to understand. I want you to be able to fundamentally look at a business and say, this is a good business. The fundamentals are still good. Now, we're going to get an Intel shortly, and that might have a different story altogether. There are some concerns. I always talk about that with Intel. But with Microsoft, the revenue and profit were growing every single effing year. And that's what makes it hard. Trust me when I say, when I walked away from that meeting, I was bruised there. I was just like, God, this guy really thinks I'm stupid, and I really think he's stupid. And it made me wonder, maybe I'm wrong. But I kept buying Microsoft, and you know I was wrong about Microsoft? I bought it between $17 and like $22 a share. When it went to 60, I sold it because I said, it's overpriced. That's what made me stupid. Because I sat there and said, it's overpriced, it'll pull back. And it's just marched up since then. And fair value on Microsoft is several times higher than $60 a share now. And that's what makes investing hard. You buy on fundamentals, but in order to make the real big money, you got to have the emotional fortitude to be able to sit there and say, yeah, it might be overpriced, but I'm okay with that because it's better than selling. And that could have seen a big drop in price. You'll see drops in prices on any stock. You'll see Berkshire Hathaway. It's fallen over 50% 3 or 4 times in the time that Warren Buffett and Charlie Munger have owned it. And they always say, did we feel poor? No, we knew what the company was worth. We didn't care about that. And that's what it takes to be a successful investor. And that's why I created this whole software and community. I wanted to combine fundamentals with emotion. And I go with the community in here in order to handle the emotions, because I want to make sure that when stocks do go down, we all have a place to talk. We have a place to understand where we are. And that's very difficult. But when the markets are all going down, it's a lot more fun to be able to cheer it on. And that's what we do. We cheer on the bad days. I was so excited today when the NASDAQ started down over 2%. It was like 2.4%. I was like, yes. And now today, how did it finish? It didn't finish very poorly. 0.64 on the NASDAQ down. The Dow down almost 1%. The S&P 0.5%. I was like, oh, I want you to cheer on those days. So that's something you want. Do me a favor. Click the link below. Sign up for the community. It's only $7 for 7 days to try it out. But make sure you do it soon because we have a wait list starting. And the second the wait list hits, when you go click that link, if the spots are taken up that day, you won't get in. So sign up for the wait list right now. So let's go back to Microsoft. Actually, let's go to the next company, Intel. Now, I've talked about Intel. I own Intel. Don't buy Intel just because I do. I've always said about Intel, this is my riskiest play in terms of a turnaround. Like, yes, there's BABA that I own, which has geopolitical risks, et cetera. Intel is literally trying to figure out its footing. It reported 18 cents EPS, beating the 13 cents, but its revenue missed $12.7 billion versus $12.8 expected. But even worse, they guided by dropping their EPS estimate from 24 cents to 10 cents, and revenue from $13.63 billion next quarter to a range of 12.5 to 13.5. It is down 9% now after hours. 9%. Now, I don't know if I will have Intel soon because I sold puts. I got lucky, was dollar cost averaging in Intel back when it was ugly. I started at 45 to 48, I started buying, but I bought all the way down to 25. So my average was about $35, and it went back up to 48. And I actually sat there and said, I don't even think the fair value is much more than 6 years. So maybe I was wrong, but I thought there were concerns about the company. So I had a sort of very aggressive covered call and got bought out on it. I was fine with that. But now it started to drop below 40. I started selling cash secured puts to get it. I will be getting these shares at around $33 to $35 a share will be my basis. And as it goes down, if I still believe my thesis, which I think I still do, that Intel can turn things around, but it's going to be a process. Let's go look at their press release to see what they're talking about. Okay, now here's the good news. First quarter revenue up 9% year over year. That's pretty solid. That is pretty solid. Second quarter, 12.5 to 13.5, and they're expecting second quarter EPS of negative 0.05, non-GAAP of 10 cents. All right. We are making steady progress against our priorities and delivered a solid quarter. I'm really surprised Pat said that. Of course not. He's not going to come out and say, well, that was a shit show. Of course not. At the end of the day, I'm looking at it going, it's an underpriced chip company. And they're building major factories in Germany, Columbus, and Arizona, and foundries, and hopefully they're able to get a grasp back on the business and regrow it profitably. The good news is, in the last few quarters, some of the exec team at Intel has been buying shares, which I like a lot. I'm really a big fan of that. Some other pretty good news. Guys, I love this. Gross margin up 6.8% from 34.2 to 41%. I love that immensely. R&D up 5%, research and development. Operating margin, now granted it's negative, but it's still up 4% here. And from a non-GAAP perspective, up 8.2%. Guys, I really like that a lot. I really, really do. It's progress. Is it great? It is not great, but it's progress. And this is something we'll go over tomorrow in that earnings video on the main channel to sit there and talk about Intel and the fundamentals, and at this price of $31 a share makes sense. Stock number 3, you've all been waiting for me to say it, the googly moogly. Google crushed it, guys. Look at it. It's up 11%. $18 a share. $1.89 reported earnings per share, beating $1.50, and revenue of $93.5 billion, beating $91.3 billion. That is quite the beat. So let's go take a look at Google's earnings release. Let us check this out. Alphabet. All right, some of the things. Revenue, 15% increase, came in at $80.53 billion versus $69.7. Now, that revenue number I gave you was including their TAC, which is a traffic acquisition cost, which is right down here. So we're going to focus on their $80.5 billion versus their $70 billion last year. Here's the breakdown. Google Search and Other, $40 billion to $46 billion. YouTube ads, $6.7 billion to $8 billion. Google Network, $7.5 to $7.4. So subscriptions, platforms, devices, a lot of stuff. Other bets, look at that. $288 billion to $495 million. Interesting. Big time growth here, guys. 15% growth in revenue. That is incredible. And guys, remember, Google owns the top 2 search engines in the world, google.com and this very channel you're on right now, YouTube. Now, they also announced a 20-cent per share dividend, first time ever, and they announced a $70 billion repurchase. Alphabet's board of directors today authorized the company to repurchase up to an additional $70 billion of its Class A and C shares. Now, guys, remember, repurchasing of stock is not always a good thing. People always cheer it. It is absolutely a value destroyer if you buy overpriced shares. And it's an absolute value creator if you buy underpriced shares. That's what's really important to keep in mind. On the next video that we do on the main channel, we will go over the valuation for Google to determine if this $70 billion buyback is a good idea or not. That's a big buyback, guys. $70 billion. So it looks like to me, if you're paying a dividend and doing the share repurchases, you're telling everybody, we don't know what to invest in. And that's a big key. We don't know what to invest in. But isn't it amazing how things have changed? Google hit a low of like $85 or $88 a share just a year and a half ago or so. And now it's back up to, after hours, $177 a share. Big jump. Big jump. So guys, again, if you like news, you like earnings releases, you like all this stuff, subscribe to our channel. And if you like the idea of being a better investor because of handling your emotion and having better tools, click the link below, $7 for 7 days. Take care.